Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined our Digital Asset Conference. Our next presentation is from Liquid Technologies. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Sean Anstey. He's the Chief Executive Officer of Liquid Technologies, which trades on the OTCQX Best Market under the symbol LQWDF and on the TSXV under the symbol LQWD. Welcome, Sean.
Thanks for having me on, John. It's exciting to be here. All right. So thank you, everyone, for tuning in. It's been a little while since we've done a presentation. Quick shout out to MetaPlanet, who was on just before us, part of the Bitcoin ecosystem. Guys are working hard in Japan, and a shout out to our shareholders around the world. We appreciate you guys tuning in and potentially new shareholders listening to what we're doing here. So we're going to hop right in here, and we're going to get into a few things here. Liquid Technologies, LQWD. We are a Bitcoin company, and we are a Lightning Network provider. And I'm going to get into what that means. So our model is pretty straightforward. We buy Bitcoin. We deploy Bitcoin on the Lightning Network, and we earn Bitcoin by helping to route transactions across the Bitcoin Lightning Network. And let's get into what the Lightning Network is. So the Lightning Network is the ultra-fast payment layer to Bitcoin itself. So Bitcoin, as you know, with all the Bitcoin miners, with all the computational power around the world, it's ultra secure, very safe. But it has a limitation to the number of transactions it can process at one go. So it's great if you want to send $10 million. It's incredible. But if you want to send, a fraction of a penny, it's not practical for that. That's where the Lightning Network comes into place. The Lightning Network, the Bitcoin Lightning Network, rides on top of Bitcoin's layer 1 network and allows you to process millions of transactions per second. And route stuff all over the world. And it's growing very quickly over the last years. It's been out for a while. We're kind of hitting an inflection point now. We're seeing it in our own data. And you can send money to anybody you want in the world in the form of Bitcoin, coming up with stable coins. It really is the open source payment rail for the internet. Now, a little background about myself. I've been in Bitcoin since 2012. I've been in tech for a long time, since the mid-90s. And one of the things that when I got into Bitcoin was like, I didn't come at it from the financial world saying, hey, it's hard money. I got it from the internet perspective saying, hey, of course, we're going to have a native digital currency and a trust layer for the internet, extending the very capabilities of the internet. And so those of you who've heard me give this little talk before on this part here of why it has value and why it's important, you have to understand how the internet is made. So the internet, and pay attention for the next 90 seconds. This is very important to understand why Bitcoin has incredible value. The internet is made of 7 technology layers. They call this the OSI stack. You can Google it in all the textbooks. Layer 1, that's the Wi-Fi, that's your Ethernet. Layer 7, those are the websites. There are multiple layers that are built in between that make the internet work as we know it. And we're literally using that OSI stack right now. And those layers were built over time. We didn't do everything just on one layer. We engineered it, that things had very specific use cases. As we had challenges, we built other layers and other technologies. Now, back in the 90s, everybody laughed at the internet. They thought we were crazy working on it. You couldn't get a bank account. They would shut you down. The lawmakers thought you're criminals because it was all about drug dealers and everything else. By 1999, the powers that be estimate the internet's worth $200 billion. That's what it would take the big companies to rebuild it. The iPhone moment comes out 2006. Suddenly, the internet becomes incredibly useful. And before that, people wouldn't believe that everybody's going to be on email. Why would I shop online? Why would I want email? I'm never going to put my credit card in there. I'm never going to bank online. All these things that we didn't laugh at. We realized this is the future. You just don't know it. So by 1999, it's 200 billion. 2006, the iPhone moment comes out. By 2010, they estimate the internet is worth $20 trillion. What is the internet worth today? That's a question for the audience. What is it worth today? 50 trillion in commerce? But it's pivotal to society. So that original 7 layers of technology that makes the internet work let society run as we know it. And when you understand the thing about Bitcoin, now here's what Bitcoin is. When I ask the question what Bitcoin is, people say it's money. But at the end of the day, what it is, it's a trust protocol extending the very capabilities of the internet itself. It takes that 7-layer stack and adds the missing 8th layer that we tried to do in the 90s. We failed repeatedly, and it finally solved it. It's a major computer science breakthrough. So it adds for trust. And the first thing for trust is money. So now we have the trust layer of the internet and the payment layer of the internet and the money layer of the internet, which extends the very plumbing of the internet for the next hundreds of years in the digital age. Right now, we think Bitcoin's worth under 2 trillion. We think the Lightning Network is, it's got $500 million in value sitting on there. This value will continue to unlock as it hyper accelerates because everything what we have going on right now is the internet. Bitcoin is an extension and continuation of the evolution of the internet itself. And the Lightning Network fills in a very, very interesting part. There is payments required built into the internet. So when you bring up your browser and you see a page not found, you get a 404 error. These are response codes. It's built into every browser, built into every web server. These are standards done in the late 80s, early 90s. The payment required came in around 96, 97. Nothing until now could take advantage of it. Why? Because you didn't have anything that could run at the scale of the internet. That was not owned or controlled by anybody. Not Visa, not Microsoft, not MasterCard, a true open layer like the internet itself until now. You have the Lightning Network itself, which is an open peer-to-peer payment layer, which is morally agnostic. Anyone can use it. Anyone can hop on. Anyone can build on it. It has unlimited scalability effectively because of its architecture. And it is the missing payment layer that we needed for the protocols back in the 90s. And it's finally here. And so its first thing is Bitcoin across it. It will do other things around it, but it is the true open source payment layer in my view. And we are building on it. And this is why I've always kept an eye on it. I get very excited. Started building on it 2019, continued to build out, managed to, by the grace of God, get great shareholders and a great team around me. And we've been building out stuff that's on it. So let's go on to the next slide here. And this is our network. So how does the Lightning Network work? The Lightning Network consists of nodes and channels. A node is just a server or a computer somewhere in the world running the open source Lightning Network software, which is free to use. Anyone can run it. And what you do is you establish payment channels with other node operators. But here's the key. And this is one of the things where we are in a very special place. You have to have Bitcoin on the node to establish payment channels with other node operators. It is the market that goes across in a non-custodial way to route transactions across the network. So in other words, you must have Bitcoin to make it work. And that's where we come in. So we operate nodes all over the world. We have thousands of channels. And we're connected with wallets, wallet providers, exchanges. We're right in the middle of it. And here's the thing, how we make money is a node operator. I'm going to go back a slide here. A node operator, when a payment routes across one of our nodes, we get paid a fee. We get paid a fee in Bitcoin, and that fee is market-based. We can decide what that fee is. Other market providers can set their fee is. And the network works like the internet. When a payment goes out there, it looks for the fastest route, the cheapest route, the best route, just as your internet traffic does. When you go to google.com, it goes through Verizon and TELUS and different providers and back to you. This very similar concept with some slight variations, but at the end of the day, data providers get paid for passing data. We get paid for helping to route transactions to the next stop. We don't have end customers. We are the back end provider on the network, and we are one of the key players that is out there. People know who we are, and we're continuing to build out. So we talked about this a little bit here. So we've got nodes all over. Our data is open source, is open. We hit record transaction volume in December, continue to have a good January, and we've built out a lot of automation. I want to talk about the automation a little bit here. So because we started early, we started with a vision of having nodes around the world, and people thought we were crazy, but I drew off our times of building our internet data centers and backbone carrier connections in my background, understanding that latency will matter and jurisdiction will matter and these type of things. So we have a great model that's starting to take traction. get traction. And we have a lot of data from it. So what we've been able to do is take all that data, and then we're actually using Grok AI to analyze it and help to rebalance our network. And since we've been doing that, we're seeing a lot more transaction routing, and we're going to continue to extend on that AI thing. So we have a fully autonomous network that runs basically no human in the loop, and it has unlimited potential for scaling because we don't require customers. We grow with the growth of the network, and we planted our flag early, and we built all the technology around it, and we built our capacity and our reporting within that space. And our transactions are growing. So we've routed millions in BTC, 2.3 million, quickly coming up to that point here for transaction volume. You can see that we're starting to hyper accelerate, and we grow with the growth of the network. And this is one of the things about our company, is that we continue to build, but we're part of a network, and we get the benefit of the network effect, which is bigger than us and potentially carries us up much faster than us. So this gets down to the highly scalable revenue model. So how do we make money? We make money by providing liquidity, by putting our Bitcoin to work on the network in a non-custodial way, which is key. We don't give up control. And because of that, we actually earn yield. And we earn yield off of it, and we earn yield by routing transactions across the network on behalf of people. And sometimes we'll see transactions come into our network and actually go across several of our nodes. We get paid several times. And it's a huge advantage. There are some other operators out there, but the ones that are doing it at scale, with our knowledge, with what we built out in terms of reporting, auditability. We've done that for 3 years and 4 years in climbing, and all the kind of stuff there. And all of our intelligence and analytics behind it that gives us a great moat around what we're doing. All right, so give me a second here. The network itself has been growing. So this is what I love about Liquid. We actually have no end users. We don't onboard customers. We're not sitting there. We work with companies and do integrations, and the integrations can be as simple as opening a channel, providing liquidity, which we've got dialed in very quickly. But we don't have retail users. We're not sitting there trying to do KYC. We're not having to do all the regulatory stuff that is a huge drain. We are our backbone carrier connection for the Lightning Network. And we grow with the growth of the network, and the network is growing at triple digits and continuing to accelerate. And it's my view that at some point, our bet is it will hyper accelerate, and we're starting to see some early signs of that. And the reason is because the technology has hit that iterative point where it's starting to work like magic. And people don't need to know how it works. It just simply works. Just kind of how the internet went from, dial up on my 24K modem to cable provision. Dating myself, of course, but certainly this is the next evolution of the internet. So let's touch about Bitcoin Lightning Treasury. So when we went public, we went out there as a Lightning Network company that has Bitcoin on the balance sheet. And the reason we have Bitcoin on the balance sheet, as we talked about prior, is you must have Bitcoin to open payment channels with other operators, just the way it works. You cannot get around that. And so we were Treasury from day one. And we like the model because the model is get as much Bitcoin as we can on our balance sheet, build out as fast as you can on the network, plant your flag, use that Silicon Valley model, own as much market share as you can, put that Bitcoin to work, earn yield, and let the network growth carry you up faster than anything possibly could, just as the internet carried many companies to the next level. And so that's our bet here. So we started as Treasury from day one. Now, certainly, we saw a lot of Treasury stuff in DATs and stuff over the last summer. Things went crazy. We consider ourselves Treasury 2.0. We didn't take on any debt. We didn't take on any convertibles or any kind of different things that would put an anchor around our neck. We kept things very clean. We raised capital. We bought Bitcoin, and that Bitcoin is completely unencumbered. So when you look at our market cap and you look at our share structure and you look at our sats per share, I like it this way here, because let's say our shareholders decided to vote for whatever reason, they wanted to wind down the company. That's not going to happen, but how much Bitcoin would you get? Well, if there's a ton of debt, you're not going to get any. So you don't really have Bitcoin per share. We, on the other hand, actually have Bitcoin per share. There's literally Bitcoin tied to each in terms of value and our net asset value. And then we continue to build it on the Lightning Network, and we want to see continued valuation for our Lightning Network operations reflected on our share price as we continue to get the word out, which we will be doing over the next few quarters here. This is kind of the impromptu kickoff for our marketing. So we got a lot more planned, and we've got some strategies underway. All right, so we had a project called Yield and Sats, yes, for lack of a better term. And we wanted to see what kind of rates you could get, what kind of APRs you could get. And then we had two things, weighted APR and APRs. I'm going to get into both. So we deployed a little under 50 Bitcoin, and we started working on some methodology to get much higher yield than the 1%, 2%, sometimes higher than that, which fluctuates depending on, it really depends on volume. So it really depends on volume of the Lightning Network. And of course, it is a volume game. And those volumes are climbing. We want to see that constant growth of the network. Excuse me. So what we did, we actually deployed it with on here. We had a very short window, and we used two different ways of rating it. So because you don't deploy all your Bitcoin at once, you're opening channels at different times, we use this thing called a weighted APR. Like, what is our velocity? And then what is our actual earnings? So our velocity was about 8.9 over the period. And then if you actually base it, it'll smooth out over time because you're running a short period, you're going to have a higher number. Over time, it can be anywhere between 3, 4, 6% kind of yield that's on it. And we're going to continue to get more and more information on our network because we're getting a lot of data back now. And what I love about it is we put the Bitcoin to work in a non-custodial way. We don't give up control or yield. We don't or control of it or lend it to somebody. There's no counterparty risk. There's technology risk, but the technology's been fairly battle hardened. I feel that risk is pretty low and in control. It's a big network with a lot of people looking at it. And so and we have a lot of things in place around that. So you don't have the custodial risk. It's not lend out to some lending company where it's the person may or may not be able to pay it back or they go under. We're not chasing high risk yield. We're deploying in a way that makes a lot of sense for us. So we have we're conservative in that way, but tactically aggressive. And because we see a huge opportunity here, and the opportunity will go as the network grows. All right, a sec here. We talked about this a little bit. So our corporate structure, very clean, no debt, no convertibles, nothing weird. We have 252.5 Bitcoin on the balance sheet. Hopefully a little more coming up pretty quick here. We have a tight float, and we have a very low burn. So for a tech company that's building out aggressively, one of the things you have to do when you have an opportunity where there's network effect, which doesn't happen very often, it's a winner takes most, and you got to get out early enough. You got to stay upright, and you have to continue to build. But we have a very low burn by any consideration, and we hope at some point before too long that we'll continue to, we'll erase that burn and we'll be on the profitability side. That will go as the network grows, but right now is the time to not be gun shy and plant your flag, because this time will never come again. This is it. All right, so we've got a great team. Love working with Ashley and Matt. Aziz has worked with me for a long time on other projects. We're very trusted. Pino, great in-house counsel, and Barry is just rock solid CFO. And auditors love working with him, and he's calm and he does the stuff that I couldn't do because of my ADD. But I'm grateful to have them. Grateful to have the team. And we've got some good independent. Kim Evans, independent director, known her for a long time. Worked with her for different projects. Super knowledgeable in the markets. My right hand, very trustworthy. Love her dearly. And we've got a great advisor board. So we've got Coin Mateer, that's from UTXO. We've got Sam Callahan, he's also very well known in the Bitcoin space. Coin Mateer is from UTXO. They're the effectively founders of the Bitcoin magazine and all the other a lot of Bitcoin stuff going on around the world. So it's opened a lot of doors for us. It's got us on stage to talk about, wave the flag for the company, helped us make a lot more connections. And they've been very, very supportive of the company And we're grateful. We're very grateful to have them on here. So the future of Bitcoin treasuries, we see ourselves as the future of Bitcoin treasuries. So if anybody wants to know how I think and the management team thinks beyond just the PowerPoint and the talks and the website, follow us on X. If you look at my profile, you'll find my GitHub profile. And on there, you'll see papers. And one of them is written, it's Bitcoin Treasury 2.0, and it's quite extensive. It talks about the new models for Bitcoin treasuries to be able to earn yield and not just simply raise capital and deploy it or debt and deploy it. It talks about the different models. So yes, MNAV works for Metaplanet, it works for MicroStrategy. They're in a different boat. You know, they're tapping into the massive Japanese bond market. They're tied into the indexes and the NASDAQ, et cetera, and the US markets. But little Canadian companies or smaller companies that are starting out, perhaps taking on expensive convertibles that you can't pay back is maybe not the smartest idea. Maybe you want to actually build something real, put your Bitcoin to work and make more Bitcoin and help further the ecosystem. So Treasury 2.0, find it on my X profile. It's at Sean Anstey on X. You'll see other stuff that's on there, and feel free to follow me and join the community for Liquid. All right, I think we're pretty much at the end here, so we're going to get into. Here's all our forward-looking statements. Okay, so we're going to get into the Q&A. I'm going to find the Q&A. Okay, give me 2 seconds here. Okay, question number 1. What are Liquid's thoughts about growing Bitcoin per share over time? We want as much Bitcoin as we can. We won't take on debt to do it and crazy debt to do it. We may put in lines of credit to be able to buy when it's low and repay that back when it makes sense, or some kind of strategy around there. But our goal is to continue to grow the network, and we want to earn. But we want the flywheel of the Lightning Network, which I call LNAV, Lightning Nav, to continue to grow our Bitcoin per share. We will want that thing accelerating and just continuing to show that, hey, you know what? Every time we put Bitcoin to work, we earn more Bitcoin back, and it just continues to compound. And so that's one of the things that differentiates us from other Bitcoin treasury companies. The fact that we have no debt. It's very clear what we're doing here. We have a model that we've stuck to. But it's our view from people we've talked to in conferences coming up that Lightning is going to be a big narrative coming up this year here, and we've been asked to speak at different things. And so we're seeing that's kind of step change there. We're seeing the step change in our own analytics for data being processed, and we'll take it from there. Okay, next question. How does being a public company strengthen your position in the Lightning ecosystem? So being public, we have auditors, board of directors, we've got a lot of responsibility, we've got public shareholders, we have the ability to raise capital. It's brought credibility to the Lightning ecosystem, and we found that other companies, once they saw what we were doing, were willing to work with us. And so we want to continue to bridge traditional finance with modern day Bitcoin, Lightning Network payments, and what have you. Okay, so where do you see the Lightning Network's growth heading as Bitcoin adoption expands globally? What's driving that growth? So you're seeing in the software part of it, the iterative part of it, about a year and a half ago, you hit the point where the software just worked like magic on the retail for sending off their wallets. And so we're seeing more and more of that kind of integration. In other words, the user didn't need to know anything. They just simply wanted to send $1 worth of Bitcoin to somebody in Kenya. They could do it if they both have the wallet and or Lightning wallet. And so that kind of stuff has happened. Now you're starting to see that's the point where you can start to see acceleration because you're no longer fighting the tech. And the growth, where we're seeing that there's a lot of demand from around the world. I mean, certainly if you're in places like Lebanon or Turkey or anywhere, what do you want, Bitcoin and Lightning, or do you want the local currency? And so we get out of our own little bubble here and realize that there's a huge opportunity around the world. Now the other part of it is the Lightning Network has the ability, a thing called Taproot digital assets, that it can route other assets like stablecoins. And so, as much as I'm a Bitcoiner, the US dollar is not going away tomorrow. Things will morph and change over time. But there's a lot of volume to be had there, and we see that as a great potential for us. And we've certainly talked to companies in the space, and we've done a lot of investigations. We know that Tether's very keen on the Lightning Network. We'll have to see when they deploy. I think there's more regulatory things, although they had an announcement today with a new US dollar, I think it's called USAT or something. Anyways, it's specific to the United States as a stable coin. And so it would not surprise me to see that go across the network there because I'm sure they were dealing with lots of regulatory stuff. Many Bitcoin treasury companies are currently trading below net asset value. How do you think markets reassess treasury-focused companies over time? I think the main ones like Metaplanet, MicroStrategy, and a league of their own. I think some of the other ones, it's my view, of course, and I'm talking our own book. I think Bitcoin will get back in favor. It may lift all boats, but I do think the Treasury 2.0 model is something that they'll all have to look at. And I think investors are going to look at it and say, well, either you're a market leader and you're able to raise capital out of the bond markets and rapidly turn over, and you're a leverage play, or you've got a lot of Bitcoin and you're able to put it to work and earn more Bitcoin from it. So I think you're going to see both. Well, we'll see what happens coming up here. We're just going to stick to our guns here. Okay, so do you plan on doing another financing within the next 3 months around the $1 level or lower? No, we are not interested in that, although we have taken the time here to raise some capital from existing shareholders, reposition them. Some of them got in at 410, some of them got at different places. The sell-off was pretty hard on the sector, but they're firmly with us. So it's tightly held. We may look at that if it makes sense, if we really wanted to take advantage of a dip in Bitcoin here, but we take that as in step change here. But yeah, okay. Do you plan on using any money from the last PP to do a promotional campaign, and when? We are looking at ramping up our promotional stuff. We're a little quiet over fall because of we felt it was money going nowhere because of the negativity. It's my view and our view that there may be some volatility ahead, but ultimately this could be a very good year for Bitcoin. In fact, last year, if you strip away some of the price action that people were really excited to have, the price went up in 2024 like massively, and then pulled back 38% in 2025. But one of the keys in 2025 is the fundamental changes in the market, all the regulatory changes, the administration changes, the narrative changes, the ETFs rolling in. There's so many fundamental changes for Bitcoin and the ecosystem going mainstream. The groundwork's being laid. So I'm a long-term hodler, and I started in effective 2012, and although I lost all my Bitcoin in a boating accident, so we'll leave it at that. What are your thoughts on Bitcoin price? How low do you see it going? Is that a concern for Liquid? So we kind of talked about that a little bit. I could see another dip here, that may happen or not. I don't know. Not worried about it at all because I've held for 14 years, from 10 to 1,000, whatever. People thought 1,000 was crazy. They thought 10,000 was absurd. And some people were calling for 100, and they were complete lunatics that should be burned at the stake. And yet here we are. And why? Because Bitcoin is an extension and continuation of the revolution of the internet. It is a true technological breakthrough, and it sets the stage for the next digital age for the next 200 years coming up here. So any estimate to when you could see sizable revenue? Do you see Lightning Network fees increasing anytime soon? So that's an interesting one. So back when Bitcoin first came out, and we're talking 2011, 12, in that range, the fees were so low. People are like, you can use Bitcoin to buy coffee. And that was kind of the narrative back then, because you could send, because it was. But it really wasn't designed for that at that time. Now it is. But the fees went up 1,400% in the first 2 years. And after that, another 1,400%. In other words, they normalized to what the network needed in a non-congested network. And so we see some of the stuff happening here with Lightning. We've seen the fees climb as in a market. People want reliability. It first started off very grassroots. People were doing things just out of it for free, and just out of, they were just part of it. Free is not a model, but having good value, and companies like ours coming in there with reasonable fees that are still way cheaper than Visa and MasterCard and everything else to route things and make it up on huge volume, we're seeing those fees continue to climb and normalize. So yeah, I expect the fees to climb. Our revenue in terms of sats is continuing to climb. And there's two aspects of it. So price of Bitcoin goes up. It affects the amount of Bitcoin we have deployed on the network, means we have more capacity in dollar terms. People still tend to think in. And in terms of what we earn sats, but then we convert it into dollar terms. So that helps us on both fronts here. So we have more potential as Bitcoin price goes up to have much larger network capacity. And what that means, it should attract more transactions because it makes it easier and easier for the network to route larger transactions. And we've seen that. And what we want to see is just continue to see the transaction volume and continue to climb, and the network growth continue to climb. So everything we do now and everything we've done the last stretch here is to plant our flag in anticipation of this network becoming the true payment layer of the internet. And it is truly the payment layer for Bitcoin that extends it. So, okay. What are the competitive advantages of your Lightning nodes versus other Lightning liquidity providers? So the Lightning network is like telecom networks. There's a lot of communication. You talk to people, they're sharing, you interconnect your networks. For us, we have a bigger network than everybody else. There's a lot of providers out there with single nodes. LN Big's probably the other big one, although we connect routes between them, between us and them. The key, and you need providers around the world. You need enough providers around the world to make the network continue to function. So we don't see them as direct competitors, but we have our global network, which means for latency or distribution or connecting from, if our node in Brazil connects to stuff in South America, and people want to connect to that kind of a node, they're just, if I'm Canadian, I want to connect to a Canadian Lightning node. I'm not likely to connect to a node over in Japan, even though we have nodes there. So there's all that kind of geographic differences. Plus, we have all the data. We have the analytics around the data. We have actual AI using the data to manage your network, and we're going to continue to push on that because we have the data, and that data is a big moat. We have all the reporting around it, and we have the capital structure to allow us to, on the back of success, continue to raise capital, buy more Bitcoin. I don't know how these other providers will do that. Some of them may or may not get capped out, but we will continue to push our edge. What yield range should companies realistically expect from Lightning Treasury strategies? On a full APR, my hope is somewhere between 3 and 6%, but we're seeing reports coming in higher. And so we're going to get a little more information on that. We've only been running the tests over the last, tail end of last year and into here, and we're seeing other companies report higher yields. At the end of the day, it's going to get down to volumes, and people are willing. And there's also liquidity on demand, which is actually where there's greater revenue potential, and that's where wallets and stuff can open channels on demand with us and pay for the privilege of getting on our network quickly. What are the top payment use cases you are currently serving through your network? Well, we don't necessarily see the end providers. Like the network is you only see the hop that it came from and the hop that it's going to go to. But we do know that we work with different providers. We talked about, I won't get all the names here because I can't remember if they're all disclosed, but we do have channels open with very specific providers and other wallet providers, and we continue to grow on the back of that success. People are reaching out to us or simply opening channels to us on their own because they know that we're a big provider. And if we see that, we open it back. And this is where the intelligence stuff from Grok that we're building out here for a full-on channel management should come into play. Do you anticipate needing to raise additional equity? If so, at what milestones? No, but if the markets are strong, we may do it to continue to show up the treasury or continue to add more Bitcoin. We're fine right now. There's cash on the till and there's Bitcoin on the balance sheet. We're in a very stable position. But that's the kind of thing we have to take, as it comes up here and whatever the market is giving us at that time and where we see things. So we were hate to say smart enough, but we were disciplined enough is probably the word. Last year, we were offered 15 million in debt, and we said no. We were offered all kinds of stuff. We took the equity, we bought Bitcoin, we kept a portion in our treasury for building out. We've kept a portion for runway to make sure there'd be no issues and we could wade through any storm. And we're going to continue to have that model until we get the traction and on the Lightning, the full traction that we want. Do you plan on promoting Liquid in the USA market where you are also listed? Yes, we do. And we are working on that right now. We'll get more information out there. This is just kind of the kickoff. It was a little, it came up quick. So we got a press release out this morning. We would like to get out sooner, but you know, this morning too, sometimes it's kind of helpful because people react right away and they're like, hey, you know what, I will show up. You do it the day before. Sometimes they see it and they don't follow up on it. But yes, definitely we are actively working on marketing plans and budgets as we speak. Okay, last question. Do you think the stock price is undervalued? Every CEO thinks the stock price is undervalued for his company, right? So, but actually, you know, just in terms of how we look, you know, if you were to buy our stock, the way I look at it, you get direct exposure to the price of Bitcoin. It's right every net asset. There's no encumberment. It's straight up, and you get the potential explosive upside of the Lightning Network. And I think we're really close to just the pure net asset value of Bitcoin itself. So, you know, if you want to get exposure to Bitcoin, it's a potential opportunity for you. And I think we're starting to get a little valuation for our Lightning Network. We want to see a lot more valuation for our Lightning Network. But in terms of, you know, it's a tight float with great shareholders. Yes, there's some liquidity that's out there, and the volumes can take off. But things have been, the sector's been beat up for a bit here, and I feel like, you know, there's going to be a step change in the sector before too long. That's just my view on it. And certainly people will have to make their own decisions on it. So, all right, that is all the questions. I will thank you all, and not sure what the next step is here. I think we go back to the moderator.